What's going on, guys? Welcome back to another video. So in this one, we're going to be going over all of the craziness that we have this week coming up. This is a very pivotal week going into the end of the year. We just came off midterms. We are in the midst of this crypto exchange crisis that is going on. The market did crack that 4,000 level on SPX today and touched 400 on the SPY and then rejected very aggressively. We have a lot of catalysts coming up this week, and I want to make sure that you guys are prepared going into the next couple of days and weeks here and know exactly what to look for. So again, guys, before we get into all of that information, if you do enjoy the information and analysis that I provide you guys in these videos, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who actually want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So let's get right into the charts over here and take a look at exactly what the SPY did today. So looking at this chart right here, the SPY does have a little bit more upside if it wants to continue higher to about 401.53, and that's the 200 EMA on the daily time frame. Now, we do see this cross up right here, but again, if you were following all of the rules that we have outlined for you guys in our group, this wouldn't necessarily make sense as price action is still below the 200 EMA to take this chart long. Now, we are seeing the RSI starting to pivot down to its moving average. The MACD does still have that bullish momentum here, but when we look on this 4-hour time frame here, again, the MACD is losing that momentum. You are seeing the RSI starting to touch that moving average here, and we do have a couple of key levels of support and resistance right around that 390 level, which I don't have drawn out here, but you can see it outlined on the charts here. This 4-hour level 390.75, that's going to be a key level if we start to continue lower. And again, there is a lot of money to be made on this chart here, everybody. Invictus called this move perfectly. And speaking about Invictus right here, Gabe actually tweeted this out, that the new tweaks that we've made to Invictus that we've nicknamed Helmo had an 86% success rate today. That means that on 86% of all of the alerts that it sent out, the alerts crossed. Which, if you don't understand how incredibly powerful that is, you are front running everybody else in the market who is looking at these crosses here. Very, very powerful too. And again, I do want to always highlight some of our members here. Chanley, solid base hit day today, stacking up those compounding gains, 1.16% on the day, 29% on the day, 7% on the day. But special shout out to Diana over here with a massive 513% gain on these SPY puts over here on this exact move down with Invictus. So if you guys are interested in the best place to come and learn how to trade, make sure you guys check out that link down below. We have some crazy things coming for you guys. But again, back to everything that we need to talk about here. The dollar on the daily time frame, very similar to the SPY. The SPY does have potentially a little bit more room for it to come up if it wants to touch that 200 EMA on the daily. The dollar here, though, does have a little bit more downside to about 105.61 on this daily time frame. Looking at this on the 4-hour here, well, again, it is starting to lose that bearish momentum. The RSI did just cross back above this moving average here. And with all of the catalysts that we have coming up throughout this week, you could see some overall movement in the dollar. Again, looking at the 10-year here as well, it's at 3.871% yield. So looking at this right here, if you were to see some more aggressive sell-off in the market, you would need really the 10-year to get back above 4%. That is going to be a key psychological level. And if the buyers don't step up to buy those bonds above 4% yield, they obviously see that the yields are most likely going to go higher. Markets are going to be continuously volatile, and they're waiting to get a higher yield on these 10-year bonds. So make sure you guys keep a lookout for that, though. But coming out a couple of days this week, we do have the producer price index final demand coming out tomorrow at 8:30 a.m. Now, yeah, this is the one right here that we need to take a look at. So previously, for the August period, we did see the actual PPI come out at negative 0.1% when the estimate was negative 0.1%. And when you're looking at the September data that came out in October, the actual was an increase of 0.4% and the consensus was 0.2. So you are seeing these producer prices starting to increase. Now, remember, it really depends on if those costs are going to get passed down to the consumer, and then we see those really filter into CPI there. But this is going to be a key thing to look out for tomorrow. Now, going throughout the rest of this week here, again, we have a lot of Fed speakers. 9 a.m. tomorrow, Lisa Cook speaks out on underrepresented groups. Actually, today at 6:30 p.m. Eastern, we have New York Fed President John Williams speaking. Michael Barr testifies on the regulation at Senate Banking Committee. Patrick Harker speaks on the economic outlook. Wednesday, we have retail sales excluding vehicles, import price index, capacity utilization, and this home builders index over here, which can give us a little bit more insight into the housing market. Now, especially at this point right now, in this tightening cycle, housing is going to be looked at very carefully because, well, housing still hasn't come down as much as any of these other asset classes. Housing is typically slower. So we're going to see those effects of these rate increases on the housing market going over the next couple of months. And that's going to be reflected in a lot of this housing data that we're going to be seeing here. The home builders index going to be telling us a little bit more about the housing market. Now, again, more Fed speakers coming out. And on Thursday, we are going to be getting that jobs report. And remember, from what we've said a lot on this channel about unemployment and the jobs numbers, remember, if there is a beat or higher than expected jobless claims, then it means that more people are filing for unemployment benefits, which means that less people are in the workforce, which could then mean that the Fed can back off on the pace at which they are increasing rates. That's kind of the backward situation that we're looking at here, that unemployment's going up, which could mean that things are actually getting back to normalcy, and the Fed can back off on some of these rate increases. But with a lot of what's been said over these last couple of days, especially after CPI, what a lot of people are looking at is, well, some of the Fed members have already come out and said that we can slow the pace of rate increases. We all know that we've been doing these 75 basis point rate hikes. And if we look at these numbers right here, well, the current target rate is 375 to 400 basis points. And there is an 85.4% probability that we are going to be going up to a target rate range of about 425 to 450, meaning a 50 basis point rate hike, and only a 14.6% probability of a 75 basis point rate hike. So what the market is doing here is it's pricing in a 50 basis point rate hike, but the interpretation of that 50 basis points is what really matters. What you've seen recently on this run up all the way to 400 and 4,000 on the SPX is, well, people are taking this as an overall bullish thing that the Fed can start backing off. Now, that's not necessarily the case. When we went up to 75 basis points, we were really, really behind on a lot of these metrics that we needed to get under control. Inflation, unemployment, and a lot of those other metrics that we talk about a lot here. Now that we've started to see things slowly come back under control, remember the Fed is looking at doing a soft landing or performing a soft landing. They can't do that by hiking into oblivion at 75 basis points. It's just too quick. So going down to 50 doesn't necessarily mean that things are getting better. And as a lot of the Fed members have said too, that 50 basis point rate hikes are still very meaningful. So when you start to see people in the news or on social media talking about the concept of a Fed pivot, we're not going to see the pivot until the Fed decides to stop raising interest rates and maybe even brings them down. That's the pivot. It's not going from 75 to 50 basis points. What we really need to see is how the market is going to take that 50 basis point hike and how long we're going to be raising by 50 basis points for. We've talked about this too, but it's not necessarily a question of what the interest rate increases are going to be now. It's how long we're actually going to be raising interest rates for and where this terminal rate is actually going to be. Right now, we have no idea, so we're kind of sitting in the dark here and waiting for more data to come out and listening to these comments from the Fed and trying to trim off all the BS of what they're saying and get to the actual answer of what we need to look at, how we are going to get there, and when we could potentially see them stop raising interest rates based on X, Y, and Z. Now, we should be getting that in the first quarter of next year, but looking at going into the end of this week here, and to kind of wrap this up in a little bow, we do have a lot of those Fed speakers, so we could be seeing a lot more volatility. Again, guys, remember, it doesn't matter if the market goes up or down at this point. We're going to make money either way. But having that context there is going to be very helpful in determining, okay, this is where my bias should be. Right now, tomorrow, we're going to get a lot of data in the morning, PPI, Empire State Manufacturing, and those are things that I'll be walking you guys through on that live stream tomorrow in our community. So guys, that is going to wrap up this video here. If you did enjoy the information and analysis that I provided for you guys in this one, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So hope you guys are having a great evening. I'll see you guys in the next one. Peace.